And just like that, we are back at new all-time highs.
Folks, what can I say but the old stock market, aka the world's largest casino, it surely keeps you on your toes and it never disappoints. But I have good news for you. Even though the market rippity-skippity-doo-dah to the upside today, I think it's going to be continuing in the short term. And tomorrow, I hope you're watching this video in time, I think we're going to be seeing another new record. Obviously, if you enjoy these type of market breakdowns, don't forget to like, subscribe, turn on your notifications, share the video with your grandma, but most importantly, let's get to it. So when the market officially closed on the day, we got a headline that I don't think many traders were expecting. S&P 500 closes at a fresh record high today, Thursday, on hope jobs report won't be too cold or hot, and obviously I'll be explaining what in the world that means. Very quickly, before we get into the details, I like to take a step back and let you know the overall context of where we're at. So the S&P 500, generally thought to be the barometer for the overall US stock market, higher highs, higher lows. We actually haven't had a fresh lower low in quite a while. This is a record close, and it does look like tomorrow we're not that far away from punching in a new record. The Nasdaq, pretty much a similar situation, a little bit weaker recently, but still technically higher lows. And I have some good news for you who are playing the tech sector. It does look as if we're on the verge, we're knocking on the door of a nice technical breakout, which would then set us up for a test of the all-time high. A little bit of a different story. Russell still looking good, higher highs, higher lows, strong trend, but still obviously quite far away from the all-time high we saw in November of 2024, but the recent trend obviously very bullish. Now, the one thing that's really missing the memo here is actually Bitcoin. Even though it hit a record high on Thursday, August the 14th, since then, lower highs, lower lows, clearly taking out some of these important key recent lows. So clearly I will be paying attention to that one, but just wanted to point out where we are generically in the larger picture. Now, specifically today for my scalp traders, my day traders, all of you guys, we ripped it. It just basically around 10:15, the bulls said, we got this. The bears took a nap and we just did not look back. Same thing in the SPY, the Qs. Here's a heat map of the S&P 500. There's a lot more green than anything else. The options market, absurdly bullish, just kept buying and buying and buying. The Mag 7, look at that delta, really just start ripping around 1:30 in the afternoon. And just so you know, this is actually some of the largest buying I have seen to date, tracking the data on the New York Stock Exchange. So huge amount of bullishness no matter how you chop it up. I also want to let you know going into tomorrow, and this is going to be important a little bit later, but just for a bit of context here, lots of calls in play. In fact, there's about 20-ish percent, 30-ish percent more calls in play than there are puts. But what's funny about that, and not really funny for the person who did it, but this bullishness, as I started this video off, was not really assumed. People didn't think this was going to happen today. When we started off the day, this is what the gamma map for the S&P 500 looked like at 9:30. We had an iron condor. Someone had call credit spreads, put credit spreads. For you who don't know what this is or need a quick refresher, they were basically betting that we would conclude the day in between these bounds. Well, not much longer, someone threw in another bet on top of it, as in an iron condor within an iron condor. And what's crazy is you can see that by the end of the day, we started testing this. This is basically an under bet. For those of you who are familiar with sports betting, they basically want it under this value. Well, around 1:30-ish, the first guy started to get tested. And by the end of the day, both of them are getting blown out. We haven't seen this in a while where both of them got their butts handed to them, officially both getting blown out. Absolutely crazy. So as I said, people were not anticipating it, and it very much sets up tomorrow to be one of the most interesting days we've had in the market in quite some time. What to look for in the first jobs report since Trump fired the BLS chief. Economists and policymakers will be watching closely to see if hiring continued to cool this summer. This is the talk of the town. What in the world is going to be the unemployment rate and the non-farm payrolls tomorrow, Friday, September the 5th? I hope you are watching this in time. Just so you know, the expectation is 75,000 jobs and an unemployment rate of 4.3%. And this is going to have huge implications, not just on the day of is the report good or bad, but remember, we're in this giant fight between the Trump administration and the Fed of what's going on with monetary policy. Well, today we got some jobs numbers and they were not as good as expected, which in a weird way was actually kind of good. So you could see right here the ADP non-farm employment change lower than anticipated, initial jobless claims higher than anticipated. So we're getting weakening jobs numbers, and then all of a sudden that shot up the odds of a 25 bips rate cut at the September 17th FOMC meeting, where they decide to cut from 4.25% down to 4%. Also, looking at poly market right now, there's an 86% chance of a 25 bips rate cut, and looking at Kohrs, they're saying there's an 87% chance. So basically, the numbers we got this morning, ADP non-farm employment change and the initial jobless claims, both weaker than expected, the odds of a rate cut going up, and the market actually pushing to almost a brand new all-time high. And I'm here to tell you that depending on this report tomorrow, we might be setting another record. Friday's jobs report could confirm a slowing labor market, but will stocks care? Kind of a complicated question, but a very good question. So remember, when it comes to the Fed, they have a dual mandate. They care about two things and two things only: price stability and the job market. Price stability relates to inflation. Ideally, they are targeting 2% long-term inflation. And then obviously the job market, they don't want a weak job market. That's their dual mandate. That's what they care about. A long time ago, about a year or two ago, we had inflation all the way sky high, 7, 8, 9%. Recently, it's come down and now it's really sticky at 3. So it's come down quite a bit, but it's still slightly above what we need it to be. On the other side, we have a pretty good job market. Unemployment was at a historic low, but recently it's starting to show some weakness. And that's really being reflected on some of the numbers we just got. So the fact that it's getting a little bit more weak is all of a sudden putting a bit more pressure on the Fed beyond what Trump is or isn't doing to actually maybe cut rates, because they don't want the job market to get that weak. So bringing you back to what we were talking about at the beginning of this video, they don't want the report to be too hot or too cold. And in all reality, I'm kind of surprised I'm saying this, that's actually one of the smartest headlines I've ever heard from CNBC. It's very astute. If you look at when we've gotten rate cuts historically, sometimes the market goes sky high, it rockets. Other times, it completely plummets. It averages out to pretty much nothing, but it brings up this almost like bimodal distribution. Not to get too nerdy on you, but it makes you wonder, okay, why do we have two distinct buckets? And the answer, it's very complicated, but it's effectively this. It's all of the market's perception of why are we getting a rate cut? Are we getting a rate cut because the job market is absolutely horrible and the Fed needs to help with stimulation? Because if so, they get scared. The market is a forward-looking organism and it drops because it thinks that the Fed knows something we don't know. But if the market perceives us as getting a rate cut because the Fed has won and it took care of inflation and it's just trying to stabilize the job market, then those are the circumstances in which it skyrockets. So in reality, you don't want jobs to be so amazingly strong that the Fed doesn't want to cut at all because they're still trying to take on inflation, but you don't want them to be so bad that the market thinks that there's something seriously wrong underneath, which is why we need that Goldilocks situation. So basically, if jobs come in at expectations, I am fully looking on a brand new all-time high. Obviously, I know I just hit you with a fire hose worth of information. So of course, if you have any questions, comments, or concerns about any of that, let me know in a comment below. I'll do my best to get back to all of you before the jobs report. This is very important stuff. But on that particular note, you should know that kind of in this realm, there's still some other drama. DOJ opens criminal investigation into Fed's cook, issues subpoenas. So she is a voting member of the FOC. She's a Fed governor. She helps decide if we're getting Fed rate cuts or not. So this is another thing that could complicate the situation. And also, Trump's Fed pick draws Democratic fire at confirmation hearing. A different Fed governor, Stephen Mirren, who really is going to basically get confirmed as of today, he had some interesting commentary of this idea of Fed being independent. And he was basically saying, yeah, they should be, but also I'm going to potentially keep my job currently at the White House. So that could be another thing that, I don't know, makes the situation a bit more complicated. So here's really the TLDR. In the short term, pay attention to the job report because that's going to have huge implications on the Fed, which will be having their FOMC meeting on September the 17th, where most likely we're going to get a 25 bips rate cut. Between now and then, clearly we're getting the information and we'll have the price action to know which way this market's going to be trending. But as of this moment, even though seasonality tells us things are a little bit rough, it looks like this particular September might be bucking the trend because going into this report, especially if we could get that Goldilocks situation, it looks like we're not just going to be hitting a new high, but we might be just continuing this trip to the moon. Obviously, this goes without saying, but there's a couple unknowns. You never know which way this is or isn't going to break. So obviously, play accordingly. Please respect your risk and never oversize or over leverage. But man, oh man, is tomorrow going to have some fireworks. I hope to see you there. I'll be streaming the whole thing. Catch me wherever you're watching this video. We're going to be doing the live show as we do every single day of the trading week. I appreciate the good vibes. That's what I have for you now. I'll catch you in the next one. Peace.